one of the common things that I've seen just also from talking to people that own like family businesses is, and that we've done early on in the beginning, is mix personal and business expenses. How's it going, everyone? Welcome back to another episode of Driven. In today's episode, we're going to be discussing why it's important keeping track of your financials.
Yeah, and so for those that don't know us, my name is Juan. This is my brother Alexis, and together in 2019 we started a business in e-commerce selling, automotive films, pre-cuts, that currently does over $3 million a year in revenue. So I think at least up to that point, we have a good idea as to what we're talking about.
Yeah, damn, that 3 million took a while. It took a while, but it didn't.
Yeah, there was a lot that we learned though, and so I'm kind of glad that we kind of had to go through the tough businesses and the tough things, because I think when we do, or if and when, and let's say when a better not a better, but when the time comes, everything that we've learned is just gonna boom.
Yeah, because technically in this business we're about to go on 5 years. We haven't even done the full 5 years. We're about to go on 5 years, 5 years officially. And so I know we hit the run rate of, this is our first business that does $1 million, and then 2 million, and now we're gonna be hitting for the year of 2024. It's gonna be a run rate of 3 million plus.
Yeah.
So that's 5 years. But we've been doing entrepreneurship. We've been doing business for a long time.
Yeah.
Since high school.
Yep. And even before that.
And even before that.
The little things like you selling Gatorades, selling stuff online, you random stuff that we didn't use anymore. So we've always had that.
Yep. Yeah. So we had a lot of, ups and downs with businesses, and, right now we're doing pretty good. And like you said, we're building the skills. It's a good business. I know there's better businesses out there, or business models, but right now we're building our skill set. If we're able to build it up to a big stage, which, going against the currents.
Yeah.
Imagine we were going with the currents. So right now we're building up our skills. So we're just sharing everything we know. Mm-hmm. And one of the things that we shared and we struggled and we messed up in the beginning is keeping accurate track of your financials.
Yep.
And I guess I had the most experience in the beginning, because I know we split our roles. You were taking more of the operations because you already knew the back end stuff. You already knew the platforms. You already knew the business model. And I'm like, well, I could just learn finance. Yeah. So that's one of the things I learned. But off of your, I guess, initial thoughts, or just initial thoughts, how important is it to keep track of your financials?
Which that changed, because you remember some of the things that is in the beginning, like, let's just deduct this, or like that was back then when there was no income, or we were genuinely at a loss. Yep. But I know that I didn't put too much importance. I didn't think like, oh, it is what it is. Like, let's just do this when it comes to finance, or like, it's just a receipt. Like, okay, fuck, so bad, too bad. So it was more of a careless and carefree way of looking at it, as to keep track of the financial records. But I know through time that kind of shifted. For one, luckily we haven't been, audited or anything like that. But I know that, just looking at videos of, different accountants, different businesses, hearing audits, and almost everyone that I hear on social media is audited. Keeping track of your financial records, I think, is become extremely important, so that, let's say once, because at some point I feel like we are going to get audited. Yep. And so being audited, I mean, it's going to be extremely important that we have the, the records to show that everything that we've done is, legit and legitimately and good. Because I know that the consequences of not that, it's actually, I don't know the consequences, but I'm pretty sure, well, for one, you're going to have to pay, I'm pretty sure, the taxes. I'm pretty sure it's going to be fees, penalties, and maybe, I've heard people at the extreme go to jail.
At the extreme, yes.
And so, obviously, we don't want that.
Yep.
We don't want a misdemeanor. We don't want a felony.
Yep.
For one, because, if we're still, working on getting our residency and our citizenship, we can't have that. And so, definitely that's one. And that's one of the things that I think I've learned, that keeping record of your financial records is extremely important. And so I don't know, what do you think of that, or what was your mindset back then as opposed to it is now?
So I think my mindset is that it's always been important.
Okay.
Now I know that you mentioned like big words like audit, and also because we're in the mindset of right now where we have a business, we're taking in the business we have few employees, 13, 14, 15 with us. And then so right now we're at a stage where that's extremely important. But I know in the beginning, when we were starting out, when we were selling Gatorades, when we were selling electronics online, or I remember we went to a swap meet one time, remember?
Yeah. So, we sold at the LA Community College swap meet.
Yeah.
I remember that.
Yeah, so during those times, keeping track of financials, I think that was the last thing on our mind. It was just making money so we could pay our bills, so we could get out of debt. So that was our mindset in the beginning. It wasn't even just to grow a business. It was just like, damn, I think it'll be cool to, I don't have money, so let me get a side hustle and make some money, and then I'll just buy my necessities, clothing, food, paying my bills, having extra cash. So I think that's towards the beginning, and I think that's a mistake that most new entrepreneurs make, which, I don't think that's anything to blame anyone. Because, again, I think it is the most important thing, is just making sure you have enough money to eat. So that was the first thing. And I know if, you are a new entrepreneur and that's, business, growing a legit business where you have, like, the structure, you have, like, you open up an entity and then you have your business model, you're scaling it, you start hiring people, that's when the financials are extremely important if you want to grow to a big stage. Well, I think in general it is, but so that's why I think right now we have more of a, like, damn, we really have to be, like, to the T, because we do see it. Like, the longer we are in business, the more revenue we get. It's almost a guarantee we are going to get audited. Because for the most part, the IRS, and I could be wrong, but I don't think they target small businesses to get audited.
Right. Doesn't make sense for them to send someone that's getting paid so-and-so to audit a business that maybe owes $1,000, $2,000 extra in taxes. Yeah,
they're going to pay more on the person who's doing the job. Freaking, and I know they that's beyond the point, but I know they I think it was a year, 2 years ago, they got like an extra couple thousand people for the IRS to audit people audit businesses, so, which I think that's dumb. But anyways, so I guess, is there any recommendations on you, because I know you had a different mindset before? Is there any recommendations you would give people, like, maybe they're just starting out, of like, okay, I want to grow legit business, so let me start early? Okay, so I guess before that, what are some of the issues that can happen if in the beginning you don't have your financial records on point? What are some of the problems people can face, or
some of the problems that we faced exactly is I know that we didn't have too much of an accurate, like, bookkeeping records, documents, any of that. And so I know that once we got with a very good accountant that specializes in business, once we had that, and they were, and then there were so many things that I think that you and are one of our, who also does bookkeeping, learned is there's a lot of things that were learned, because I still like closing the books, or what is it called, that that one thing, reconciliations. Like, I don't even to this point I have a vague ideas to what it means, but there wasn't we didn't have any of that. And so I know that they looked at it for the entirety of the business, and I know there was a lot of things that were messed up. There was a lot of issues. There was a lot, and so the amount of time that we put into trying to fix it, or making it right, and so that's time that we could have utilized for other things, whether it be like the operations, the products, designs, selling, and whatnot. That was, and the headache of it, a lot of stuff, inaccuracies, the tax, when you redo your taxes, I forgot, when you file it, and then you file audit, not audit, where you had to change your taxes for whatever reason.
You had to update them. There's a specific word where you have to update them.
And so much issues by not having the accurate record keeping, and the accurate way of doing your financial records. And so those are some of the consequences that we faced. And so but at the beginning, you're starting out, I didn't think it's that important, because really you're not making money, which to an extent that's kind of true. But if the intention is to grow, if the intention is to make money, the things that you do when you start out, I think are become extremely important to, once you're, let's say, at that stage where let's say you ever do get out of it. And so like yeah, I know it might not seem important. It may seem like a drag. It may seem like fuck, you know, you don't want to do it, but you know, learning from us, it is important. So then later down the road, you don't have to deal with those issues and problems. So yeah, and then I guess I'll ask you the same question, like
so what are some of the problems we faced early on? So I know even before this business, because I know we had a prior business that we ended up closing because we could have fixed it, but it failed.
Yeah.
But I know we were also doing side hustles on the side where we were selling water, which was cash, which, you know, hopefully the IRS doesn't hear this, but no, but that's beyond the point. But that was when we were kids.
Yeah, like water bottles and
water
Gatorades.
Bottles. Yeah, like because I remember we used to play at in a soccer team.
Yeah.
And I would buy like waters, Gatorades, and then sell them all of them for $1, pay cash, and then so anyways.
That's like
yeah, but some of the early things we did is that most people, again, I think most small businesses, I know it's the, you know, the cornerstones, not the cornerstones, but like the liquors, the family mom and pop stores, those small like businesses that are doing $50,000 to $100,000 a year in revenue. I know that one of the common things that I've seen just also from talking people that own like family businesses is, and that we've done early on in the beginning, is mix personal and business expenses, where maybe most of your income is coming through your business checking, and then you're also like buying maybe like something here and then another thing there, your groceries here and whatnot. So that's one of the things that I know it's very easy to just mix everything together, your personal and your business. And one of the things that in the beginning, a solution to that is just to open up a separate checking account where even if it's your personal checking account, if both of them are personal, because I know for you to open a business checking account with a bank, you either need to have your DBA or you need to have an entity. Either one of those two. You don't necessarily have to have an LLC, but I know you could do it as a DBA. But if you're not at that stage and you do want to have accurate financials, then the easiest thing is just, you know, separate bank accounts. It's going to be personal, but everything business on one, and then everything for yourself is going to be on the rest. So that's an easy way, at least in the beginning.
No, definitely. Because I know like even now in the way that I look at it, technically, you know, whatever's in the business account is technically our money. But then it's kind of like it's separate. Like it's kind of like it's at the same. It's kind of ours, but at the same time, it isn't. It's the business, and so it's not as easy as, you know, taking money. It's because then there's the record of it. What was the use for? Was this an expense? Was this a distribute? And so it's like, so it's like technically, you know, the owners, but at the same time, to an extent, it kind of. And the feeling of it is like it isn't, because it's pretty much the business and whatnot, and also because, you know, the purposes of the funds is, you know, for like investing in media, inventory, you know, these other things, and so and that's how the way that the feeling is. And so like 100% like business, solely business, like how you said, and personal. I think that's easy. And
then the way to get your like the money from the business onto your personal is through either paying yourself through a W-2 or taking distributions. And one thing I will say is that I know we're not experts. We're not financial experts. So this is not advice. If you do want advice, then...
But that's something we've done.
Yeah, and we're just talking based on our experience.
Well, we've done... but like how you said, like,
we're not professionals.
We're not professionals. So
we're just talking about some of the issues that we face, some of the mistakes we've done, and what we're doing right now. And another thing I also wanted to touch up on is that I know, like, again, because as a business owner, hearing about an audit, because we know, like, we expect it, even, like, as the years goes by, we expect that we're going to get audited. But even still hearing the word audit, it's freaking scary. Now, I know with the IRS, you only get audited if you raise red flags, because there's certain things that you do, or maybe you just randomly get picked. I don't know like the requirements of you to get audited, but just, you know, based on my experience and the knowledge I have, I know that when you do your taxes, you submit it to the IRS, you submit it to the state, and I know like they're gonna take your word for it. And so all an audit is I know in the beginning, like once you submit everything, you're like, you tell the IRS, hey, IRS, for this year I made 50,000. The next year I made 100,000. The next year I made 200,000. So the IRS in the beginning, they're going to be like, oh yeah, I'll take your word for it. Yeah. Thank you for submitting it. Here it is. An audit is pretty much letting the business knows, I know I'm taking your word for it in the beginning, but I just want to make sure. So that's what an audit is they're gonna go through your books. They're gonna go deep into your books, every single little thing. They're gonna go into it, and that's what an audit is. If they find some inconsistencies or something that some expenses or categorizations that are not supposed to be there, again, you're either gonna get a fine, penalty. And if you're doing it on purpose where you want to cheat the IRS, and maybe that's jail time. Yeah, but that's all audit is. From my knowledge, again.
Yeah. Which is something that, and that's why we try to do everything as legit as possible.
Like, 100%.
I know, like, also from one of the things that I heard from an accountant is that, not every company's books is 100% like accurate, but so there might be a little bit of discrepancies here and there, but we try our best to have everything be as legit as possible, as accurate as possible, so then we don't raise those red flags and get out of it.
Well,
but like, I think the expectation at some point, especially as the business grows, as there's more profit, the likelihood that we may get out of it. And I think right now we're taking the right steps so that when we do, everything is tight, legit.
That we don't even have to worry about it.
Yep. And so, yeah. But do you have anything to add?
Nope.
No? So with that being said, this has been another episode of Driven. My name is Juan.
My name is Alexis.
And we'll see you on the next one.